Amazing. I see some hands up. Excellent. Fantastic. Good. Well, I'm looking forward to and by the way, if you see me looking this way off to my right, I'm looking at a different screen where I can see all of you. And if you want to, again, turn your video on at some point, you're welcome to, but I can see your names and it's excellent. And I know you're here. So I'm looking forward to working with you today. Let's jump in here very quickly and get in. There's a lot to talk about, and I've got a whole, we're going to go for 90 minutes, and I've got a lot to do to review with you. So let's jump in and not waste any time. And we'll start. I do want to thank the CFA Society for Ghana for having us in here today. Let me start with a quick introduction, and then I will go back. So first of all, you can see my name. My name is Ian Schnoor. I am the Executive Director of the Financial Modeling Institute. I am based right now in Toronto, in Canada, and so it's 10 o'clock in the morning here for us. Just out of curiosity, has anybody here been to Toronto before from this? Anyone here been to Toronto or to Canada? Any of you guys ever been? No thumbs going up right now. Well, I hope to either get over your way or to maybe have some of you. Oh, Svetlana, I can see you've been this way. Excellent. So I'm here in Toronto with my colleague, Julian, and I am the Executive Director of the Financial Modeling Institute. There's Julian. He's waving to you. And I'm also the president and founder of another business called the Marquee Group. Let me tell you my background very quickly so that you have a sense for why I'm here with you. I started my career a number of years ago as an investment banker. I was working for a couple of banks. Started my career at a bank called BMO, and then I spent a couple of years at Citibank. You've heard of Citibank, of course. And I did traditional mergers and acquisitions and a lot of corporate work with clients, and I did a lot of financial modeling. And around 20 years ago, I left banking, and I started this business here called the Marquee Group. And what we do at the Marquee Group, mostly in North America, is we run training programs. We run training in financial modeling and valuation, and we're doing more and more all over the world. But through the Marquee Group, we train people in how to build strong models. So I've taught thousands of days and tens of thousands of people financial modeling for the past 20 years. One of the things that we discovered a few years ago, about 5 years ago, is that financial modeling was becoming much more of an important skill set. And all sorts of people would take courses, but they had no way to validate or to prove that they had strong modeling skills. So everybody would put on their resume or their CV that they took a modeling course, but it doesn't mean much to say you took a course. There was no way to truly test people's modeling skills. So what we did with a couple of other organizations is we, about 5 years ago, created this organization called the Financial Modeling Institute. The sole purpose of the Financial Modeling Institute is to provide rigorous, challenging testing in the field of financial modeling. So all we do is offer testing in the field of financial modeling. You can see here, I'll show you a slide. There's a whole bunch of slides at the back. I'm not going to go through these today. You can read up on it on your own. But it's a 3-level certification, but each level has its own name. So when you pass the first level, it's called the AFM. You get what's called the Advanced Financial Modeler Badge. And then there's the level 2, the Chartered Financial Modeler, and you can see this here. The exams are 4 hours. They're rigorous. They're challenging. And we've actually had a lot of interest out of Africa. It's amazing. We had a whole bunch of people in Nigeria writing the exam very recently. And if you're interested, I'd love to chat with you further about it. To tell you that the exams used to be in person, but because of COVID, this past October, we moved all the exams to being virtual. So people are now writing them from home, but they're still proctored and highly secure. And so it's working very, very well. So that's kind of what we do. And this is some feedback. I will show you, by the way, all the slides that I'm showing you now, we're going to send to you. So I will send these to the CFA Society when this program is over. So you're going to receive all the slides along with the financial model that I'm going to show you in just a few minutes. At the back of this deck, there's a whole bunch of slides on the Financial Modeling Institute, and you can read up to know what we do, where we work, and how the Financial Modeling Institute works if you're interested in improving your modeling skills. But one of the things that we've done, though, so you can see our passion is financial modeling. Everything we do at the Financial Modeling Institute is to help people improve their modeling skills. So in that regard, we came out with a free webinar series on educational topics. This is session 1 in our series on financial modeling best practices. And today I'm going to share with you my top 10 favorite skills and tips to build a world-class, best-in-class financial model. We're going to go through that here today. As part of the series, I'm going to show you a slide. There are other topics that we are leading around the world as well on checking and reviewing a financial model, scenario analysis, model circularity, model bloat. So if you guys are interested and people enjoy today's webinar, I'm be very happy to come back and lead more webinars down the road. Just before we get started then, I would love another show of hands because I was speaking to the executive of the CFA Society in Ghana just yesterday. Who here is, I know that some of you are coming from other areas in Africa. How many of you are in Ghana right now? I imagine most of you, but I'd love to see a show of hands. If you're in Ghana, I'm guessing a lot of you are in Ghana. Yeah, a lot of hands going up here. Okay, excellent. How many of you are not in Ghana? Is any of you in neighboring countries in Ivory Coast or anybody here from other places other than Ghana? Well, let me know. You're welcome to be in touch and email me. If you have any questions today, guys, if you have any questions today, you can put them in the chat. Just go to the chat window and put your questions there. I will try to take some questions during the webinar, but I'm also going to leave time at the end. And we'll have 10 or 15 minutes at the end of the webinar. And Julian and I will discuss some of the questions that you guys are asking. Okay, so I'm going to jump into some slides here. I'm also going to show you a spreadsheet with a model, and we're going to cover a lot of things here today in the session. So let me start off here. Starting off on page 9 of the slides, there's a page that says financial modeling is a discipline. And one thing that I want to leave everybody with today is the idea that financial modeling is its own discipline. And in fact, financial modeling is a very multidisciplinary skill. To be good at financial modeling, you have to have a lot of different skills, which I'm going to talk about in just a moment. But before I even get to this page, I've got a question, and I'm going to go here to my notes. By the way, I'm going to keep a bunch of notes. I'm going to make a bunch of notes on a spreadsheet, and I will send these to you after the course is over. And you'll see my email address is here. If you have any questions, you're always welcome to email me directly. I always love hearing from webinar participants, so don't be shy. If you have any questions, feel free to reach out. The first question is first of all, how many of you in today's webinar have built a model? How many of you have actually built a model or a couple models by yourself in Excel? Just do me a favor, love to see a thumbs up or a hands up if you've actually built some models, right? Francis, I can see your thumbs up. Some of you have built some models. Excellent. I'm guessing that some of you have. I'm guessing some of you probably have not. Has anybody has anybody ever had to review somebody else's model? Has anybody here ever had to review a model that you did not build before? Okay, good. I'm seeing, right, KB, some other thumbs going up. So let me ask you this. Great, lots of hands, lots of thumbs going up. It's really great to see all of that, guys. Let me ask you this. I love to start my training classes with a question that just says, what is a financial model? And if you were here with me in person, if we were all together in person, I would actually ask some of you to answer the question. It sounds simple, but it's amazing. I mean, I've asked this question thousands of times, and I get a very wide range of answers. I'm going to tell you what I think the answer is because it's very simple. Basically, a financial model is simply a forecast, right? It's simply a forecast. All we're trying to do is take a company and forecast their financial statements into the future. How far into the future do we typically forecast? Well, we typically forecast 5 to 10 years into the future is normal. But some models go longer than 10 years, some are even less. But all we're trying to do is we're trying to build a forecast. So why? Why do we like to build forecasts? Why are we forecasting into the future? Why do we build models, right? Why do we forecast, right? Why do we build financial models? And here's why we're here. I will tell you it's because models have become, very simply, financial models have become the most important decision-making tool in finance. In the entire world of corporate finance, financial models have become the most important decision-making tools that people use. And as a result, it's so critical to have this skill. Guys, I got to tell you, in the last 5 years, a lot of employers have started putting on job postings that they want to hire somebody who already has strong financial modeling skills. Has anybody here ever looked for a job or seen a job posting and it said, we're looking for somebody with proven financial modeling skills or strong modeling skills? Has anyone ever seen that before? I'm taking a look at the board. Oh, you've seen that. Okay. You've seen that before. Great. Your hands are going up. Some of you have seen that. Can I tell you something? That's new. That's quite new. 5-10 years ago, nobody would have ever put that on a job posting. But now they're looking for people to have modeling skills when they hire candidates, which is why this is so important. And by the way, I will tell you, I happen to have my CFA designation. The CFA is a great designation. I believe that most of you are working on your CFA. Some of you might have it already. It's a great designation, but the CFA, as you know, it's not a technical designation. There's no hands-on skills. And as a result of that, part of the reason why we're here today, and by the way, we've been leading this webinar at CFA societies around the world. That's because the Institute, the parent organization, has been very supportive and has been encouraging us to work with CFA societies. The CFA Institute told us that the #1 request of CFA candidates around the world is to add more, financial modeling into the curriculum, because candidates are looking for modeling validation. So the CFA Institute was very happy to learn that we are now offering rigorous, challenging modeling testing. There are some other organizations that do some model testing, but it's very light. It's typically multiple choice, and it's typically offered by a training firm that does training, and then they'll give you a multiple choice test, right? We are doing the only truly rigorous modeling exams where you must build a model during the exam. And so I'm very pleased that the CFA Institute has been very supportive. So very simply, I've told you that a model is just a forecast, and we forecast because models have become the most important decision-making tool in finance. So what types of decisions, right? What types of decisions are people using their financial models for? Well, of course, people build their models to do just to do budgeting or planning, annual financial planning. We use models. People build models to do valuation work, to know what's something worth. Should I investing? Should we invest in a company? Should we buy the company? Should we sell a business? So we use models for valuation. People build models to do credit analysis. Can a company support more debt? Can they handle more debt? So we use models to evaluate credit, which is very important for that. People build models to look at mergers and acquisitions. They'll say, should one company buy another company? And they'll use models to evaluate that. People build models to look at risk and volatility. My point is this: financial models are critical at making the most important decisions that people make in the world of finance. So why are we here? We're here because there is a problem. And the problem is this. The problem is that most financial models that exist in the world are a mess. Most financial models are a disaster. They don't work very well. They're filled with errors and problems, and they make it very difficult for people to make strong decisions. If your model's wrong and has mistakes, you're not going to be able to make an effective decision. That's the problem. And so what I want to share with you today are my top 10 favorite tips and skills for building a world-class, best-in-class financial model. I'm going to promise you right now, if you use some of these tips and skills and you can incorporate them in financial models, you will be able to build some of the cleanest, best models that exist. By the way, this webinar is being recorded, I believe. So I'm going to move very quickly. If you want to watch it again, there should be a recording where you can see it after to take in some of the ideas. So let's go back to the slides here. And I told you that modeling is a very multidisciplinary skill. To be really good at model building, you have to have a lot of skills, like Excel skills. You need to be very good at Excel because that's the tool that we use. We need to also have a very good sense of design. People often don't think of model builders as designers, but I'm going to tell you, the number one reason why models fail is because they are poorly designed. So we're going to talk a lot today about model design, model structure, model flow. If it's designed well, it will likely work well. We need to have some good accounting skills. Just guys, with a show of hands, is anybody here an accountant? Does anyone have an accounting background? You can raise your thumbs, your hands. I'm looking at all of you right now. Anyone, right? Eunice, you've got an accounting background. Anyone else? Right, Mary? Very nice. Now, you don't have to be an accountant. I am not an accountant by trade, but it's important to understand accounting because we're going to build a set of integrated financial statements. So we need to know how that works. And we have to understand finance. We have to pull it all together. So let me go back then to our notes because I'm going to tell you this. Now we know that all a financial model is a forecast. We're forecasting a company's financial statements into the future. And I want to tell you this. I'm going to leave you with a couple of criteria. I will tell you, I want you to look back at this note a little later. I will tell you that a good financial model needs to work in two different ways. How do you know? So how do you know if a financial model, someone built a spreadsheet, a model, a forecast of a company, how do you know if it's a good model or a bad model? People ask me that all the time. They'll say, Ian, is this a good model? There's two ways to know if a model is a good model. Number one, it has, as I told you, it has to work in two ways. Number one, it needs to work electronically. And when I say a model has to work well electronically, I mean that every formula needs to be simple and make sense. So if you click on a cell in a spreadsheet, you should be able to understand every single formula. And that doesn't happen all the time. Guys, can you just raise your hands for me? Has anyone ever seen this? Has anybody ever seen a spreadsheet where you clicked on a cell and the formula was so long that it wrapped around and around and around? Has anyone ever seen a formula so long that it was wrapping around? You were getting a bit of a headache and you had to get a coffee or some other type of a beverage to understand it, right? Oh, a bunch of hands going up here. Sure. Can I tell you something? That's not optimal. That's not ideal. We should not be building formulas that way. And can I tell you, if you didn't understand that formula, that's not your fault. It should not have been built that way. So I tell people a good financial model has to work well electronically. Every single formula has to make sense. If it doesn't, we need to simplify it. Number two, a good financial model needs to work on paper or as a PDF document. You need to be able to print your model or turn it into a beautiful PDF. And why is that? Why is that? It's because decision makers will look on paper or on a PDF. The senior executives, the decision makers are going to want to see the printout as a PDF or on paper. So a good model has to work this way. And what I'm really saying is this. You probably haven't thought this before, guys, but what I'm telling you is a model needs a model, sorry, let me try and spell it. A model needs to be a powerful communication tool. It needs to tell a story. You guys all probably work in finance. You probably don't think of yourselves as storytellers, but a good finance person, a good modeler must be a powerful storyteller, because you got to tell a story about the company you're analyzing and modeling so that you can make a critical decision. So I'm going to get into our top 10 tips in just a moment here. But before we do that, you'll see on page 11, I say here a model has to be a powerful communication tool. And these are some attributes that a good model needs to follow. It's got to be dynamic and flexible. It's got to be obvious and intuitive. It has to be printable. I mentioned that. It's got to be transparent. It's got to be clear and transferable. So you'll take a read of those on your own. But when it does these things, it creates tremendous credibility for the model builder, and it inspires a lot of confidence. So I'm going to show you a model here right now, because I told you that a good model needs to work on paper or as a PDF. So let me show one to you right now. This model, I'm going to blow up the screen. This model is available on the FMI website. And what I want to tell you is this is a model. It's about 15 pages long. So it's about medium size, 15 pages. Let's quickly take a look at it. So imagine you emailed this to your boss or your client, and they've never seen it before. The first thing that they would notice is that there's a cover page. After that, they can see here, there's a lot of numbers, but they can see there's an executive summary. Then there's a page that has inputs, all the inputs and assumptions. There's a bunch of boxes. The numbers are blue. We'll talk about this. There's more inputs. Going quickly here, you can see a scenarios page. You can see next, I have a revenue forecast, a cost. Don't look at any numbers. All I want you to think about is, look, here's my income statement, my cash flow statement, my balance sheet. I want you to experience this as a printed document, because I want you to realize that a good model should feel like a presentation. As I go from page to page, you can see there are page numbers on the bottom. I hope you feel like this looks like a presentation. Look, I've got a header on every page. I've got subtitles. I've got labels. I've got a lot of lines and bolding. Very often when we show this to clients, they'll say, this looks really nice. It's legible. All the numbers are the same. They're clear. Everything fits on a page. And it creates a lot of confidence when you can do that. I'm rolling up backwards. So that's what I mean when I say a model has to look nice and work well as a paper tool. And we're going to talk today about how to do that. So this is what a model looks like as a paper-based tool. Let me show you a couple of tips here. By the way, here's a keyboard shortcut sheet. And we're going to send this to you as well with some of our favorite Excel keyboard shortcuts. Okay, so you'll get that after this webinar is over. Let me get into one thing here, because I want to now jump into our top 10 tips. One thing to keep in mind is simplicity. Simplicity. We need to make sure we keep things really simple in our models. That's how we're going to make them very powerful. Simple formulas, simple logic, simple design is going to make it clear and readable. And very often they're not. One way to keep things simple is we need to follow this rule on page 13 that says never hard code. A hard code is a terrible thing to do in models. It looks something like this. Guys, can you raise your hands if you've seen this? Can you guys, does everyone see my formula in the screen here? Look what it says. It says equals A5 times 0.025 plus 4.9, right? Has anybody ever opened a spreadsheet, clicked on a cell, and saw something like this? Have you ever seen a formula that looks like this before? Where you have a cell reference and then a dead number typed in plus another number, right? Mary, you're raising your thumb here. Has anyone else ever seen a cell in an Excel spreadsheet that looks like this? Yeah, a bunch of you have. This is a problem. This is a disaster. I would encourage you to never do this. I wish you were here with me in person. I would ask you, what does the 4.9 mean? If you clicked on a cell, what exactly does the 4.9 mean? Well, the answer is you have no idea. You should never, ever be putting in dead numbers like this, because your boss, your client, has no idea what you're doing and what it means. Recently, I was running a webinar and I said to someone, what does the 4.9 mean in this formula? And he tried to explain it to me. He went through and he was trying to tell me, but of course we have no idea what it means. We have no idea what this cell reference is. That would be nice. There we go. Thank you for muting. We don't know what this means. We can't ever put dead numbers like this. What I should have built was A5 times A6 plus A7 so that it's clear and that we can understand it. So some simple basics, which are going to get us into our top 10 best practices. For the rest of the webinar, for the next kind of 45, 50 minutes, I'm going to go through my top 10 favorite tips on modeling best practices. You're going to get this after, and then I'll leave some time for questions. I also have these, guys, these top 10 tips, I also have them in my Excel spreadsheet, so I don't have to jump back and forth. They're right here as well, as much. And I'm going to start with this. The first two tips are so important, so powerful. It says, if you ever are going to build a financial model, it is so important to build a plan. A good financial model must be planned and designed. It's so critical to properly build a plan. And I'm going to show you a couple slides in the book as well. Page 15 and page 16 deal with model planning. So let me go and put some notes here that says, I want you to be aware of this for after the fact. Model planning, I will tell you it is critical to properly plan a model before you build it. If you plan it well, it will work out very, very nicely. And if it's not well planned, it will be very hard to work with and very hard to use. And I often tell people that there are 3 steps to the planning process. So we are going to go through them together. We're going to simulate the 3 steps of model planning. I want to show you what they are. I will also put a note just for future reference. This is on page 15 of the slides here. So I will say here, page 15 of the slides is a page on model planning. Step 1 is to identify the key drivers, or what we often call the major issues. People call this the major issues or the key drivers. What is this? I want to identify what these are. And I will tell you, these are the most critical, most important assumptions that we need in the model. And why are they so critical? Why are they so important? Because they are hard to forecast and they are hard to control. They're hard to forecast and they're hard to control, but they can have a huge impact on the success or failure. Let me give you an example. Let's pretend we were building a model for a mining company. Okay, I know there's a lot of natural resources in Africa, a lot of mining and oil and gas, but let's talk about a mining company. For a mining company, let's say we were modeling a gold mining company. Well, one of the key drivers that's hard to forecast might be just the price of gold. What do we think the price of gold is going to be over the next couple of years? It can be very volatile. So I need to recognize that. It could be exchange rates. Maybe we're purchasing something in one unit and selling in a different currency. So for instance, if you're a gold mining company, you're selling in US dollars because gold is priced in US dollars, but your operating costs are in local currency. So exchange rate movements can also have a big impact. I would say other economic variables can be key drivers. And I will tell you, most companies have 3 to 5 key drivers that are critical assumptions that are hard to forecast and hard to control. And because of that, we're going to do something very special with these assumptions in just a couple minutes. So bear with me. So part of model planning is to set up what are the key things I need. Step 1 is to identify what are the most important variables, the most important assumptions that will impact my company. And we're going to make a list of them for any company you're modeling. The second step in the planning process is to make a list of all other inputs / assumptions. Make a list. This is a big list of all inputs needed. Make a big list of all the information you need to build the model. What do I mean by that? Well, obviously, we're going to need things like revenue assumptions, prices and volumes, right? What are the prices I'm selling for? What sort of sales volumes? What about things like operating costs? What are the various operating costs in the business? I'm going to want to know things like the fixed assets. How does the fixed assets work? Things like depreciation, capital expenditures. How does that work? I need to understand and make a list of other key assumptions like working capital, like the company's debt and equity. How does that work? And the reason why I'm sharing this with you is as follows. It's not the modelers. This is often a surprise when people hear this. It's not the modeler's job to make up the assumptions. It's not your job to decide what the price of gold should be in the next 5 years. It's not your job to pick the exchange rate. The modeler needs to ask questions. Your job is to ask a lot of questions and then to collect the information and enter it in your model. Who are you asking? You're going to ask your boss, your client. You can do research. Our job is to ask a lot of good questions and come up with the data we need. Guys, I personally, over the last 20 years, have built, I don't know, over 100 models for lots and lots of different industries. I believe that I could build a model. I believe I could build a model for any company in the world because I don't need to be the expert in that specific company. And I believe the same for all of you. You can build a model for any company because somebody else is going to be there who understands and who can give you the information you need. So that's why I tell you here, one of the key parts of modeling is to ask lots and lots of questions. How does revenue work? How does income tax work for this company? How does the debt work for this company? I will model it, but I need you to help me provide the information. So planning and question asking is so critical. Let's take a look at some of the key questions we like to ask on the slides. If you guys hired me to build a model, I want to know, what's the purpose of the model? Where am I going to get my detail, the data? How much detail do I need? How do we measure the results? How do we measure success? What metrics should I use? How many time periods? And so on and so forth. I will ask you that until I understand what we need in this model. I will also tell you something else. You know, people often think that the model builder spends all their time in Excel working on a spreadsheet, right? People think that if you're building a model, you're going to spend all your time in a corner building a spreadsheet. It's not true. I will tell you, a good modeler spends approximately 50% of their time in Excel working on the model. So what's the rest of your time doing? The rest of your time is spent asking questions, talking to people, doing research, presenting the model, and becoming the focal point of the whole project. So it's a very powerful skill, and which is why a lot of people love modeling, because it gets you right in the middle of all the action. You have to be right in the center of everything. So that's what's going on there too. So the first step is to think about the key drivers and then make a list of all the inputs you need, but you got to get help. Someone's going to help provide you the data. The final step in the planning process is to plan out the flow, meaning what will the model look like on paper when finished? What will it look like? What will be on every page? Guys, I've got a question. Has anybody here recently built a PowerPoint presentation? Do you guys ever build, can you raise your hands? Who here has ever built recently a presentation of some sort, right? No, Enoch, I can see you, right? Francis, Manuel, you guys have raised your hands. You guys, I'm sure all of you at some point built a presentation, right? I wish I could ask you, great, lots of thumbs going up. I wish I could ask you directly. When you build a presentation, excuse me, when you build a presentation, what's the very first thing you do, right? When building a presentation, the first thing you do is make the table of contents. right? When you build a PowerPoint, first you think about the table of contents. What am I going to put on every page? And then you go build the pages. And I would say to you, do the same thing for a model. Do the same thing for a model. Plan out what will be on every page. It's not an accident. And then go away and build it. And if you do a good job of that, your model will come together very, very nicely. So I've talked about the first 2 tips. I wanted you to realize modeling is not just sitting in a dark room working in Excel. That's only half of it. The other half is being right in the middle of the action, asking questions, thinking, designing, presenting. And if you do a good job with these, you will be very, very much in demand to build models. Let's take a look at the next 2. But before I get to the next 2 assumptions here, I want to talk about model flow. I'm going to talk about optimal model flow. What's the optimal order of a good model? And I showed you here the model I showed you earlier. I'm going to go back and talk about what a nice order is for models. Let's take a look here at let's take a look at the model again. You'll notice, guys, the very first thing is a cover page. And I will tell you that most models do not include a cover page, but it's so powerful and it's so helpful. I'm going to put a note that says, I strongly encourage you to always include a cover page in your financial models. I will tell you that most models do not include this. Why is it nice to include a cover page? Ooh, got to help me. Why is it nice? It sets the stage. It's professional. And what it does is it tells your reader that this is much more than just a bunch of calculated numbers. It's a financial presentation. Tells your reader that you are making a financial presentation, and it therefore inspires confidence. What should you include on the cover page? I would include things like the company name, logo, whatever. You can put the logo, you can put the date, your name, whatever you want to put. It only takes 5 minutes. Make it look nice. It adds a lot of confidence. Now, one tip I will show you in Excel is this: to automate a date. Very often I will show you, does everyone see the model? I've gone into the model here now in Excel, and you can see here that there's a date, and it's showing me today's date. Very often in Excel, we like to see a current date in a spreadsheet. So what I will tell you is, if you want to see the current date, to automate a date, there's only 2 ways. And the first way is by using Excel's today function, which you probably have seen here. If I do this, right, watch, if I say equals today, open bracket, close bracket, it returns the date, but it's dynamic. It will change every day. There's one other way that people have often not seen before to automate a date, and that's by using another feature called equals now. Equals now is another nice feature in Excel, and this one shows the date and the time. So you can get both of them that way. But the point is, a very simple cover page sets the stage and lets people know what this model is all about. It makes it feel like a presentation. I will tell you the next thing we should do in a model design is to include an executive summary. I will also tell you that, oops, I meant to say here, most models do not include a cover page. I will also tell you that most models I've ever seen do not include an executive summary. And in our model, if we go back to our model, take a look. The next sheet, you guys see where I am? The next sheet is a summary. It's an executive summary. And you can see, look what I'm doing. On my executive summary, I'm showing a bunch of information like revenue, EBITDA with some margins. I've got net income, and I'm doing it nicely under 3 options: under a base case, and then again under a best case, and then under a worst case. So that's all that we're doing here, is building an executive summary. So my question then is, why is this so important? Why is it so important? I promise you, this has happened to me every single time I ever present a model to a client. I will tell you, the first thing a client always wants to know is whenever you go present a model to a client, the first thing that they want to always know is what's the answer? What's the answer to your model? What's the answer? That's what they want to know. So it's really important to show it up front. And I will tell you that this page needs to be customized. It needs to be customized for your deal, for your boss, for your client. But we often include things like whatever, EBITDA or valuation NPVs, if you're doing some valuation work, or IRRs, or credit stats, or other ratios. Whatever you need to make a decision is what you should put up front. So it's so critical because it allows the client to understand the answer right away, and most models do not do this. So please make sure you do this. I will also tell you to build it last. Obviously, we want to see it first, but it's the very last page you build because you can't do it until everything else is built. So let's now talk about the third part of good model design, and that is the inputs and assumptions. And if you take a look back at my model, I have my executive summary. After the executive summary, I have a sheet here called assumptions. And what's going on here is that every single data input has been entered right up front. Okay, every single input has been entered right up front. I strongly feel that it's important to have an assumption page. You'll also notice that these numbers are blue. I'm going to talk about that in just a moment. I'll come back to that. But the first big question is why? And I will tell you, many models do not include an assumption section. So where do people put their data inputs? Where do they put the assumptions if they're not all together? Well, they put them everywhere. They scatter them everywhere in the whole model. And that's not optimal. It makes it very difficult. Why? So why do we want this up front? Why is it so important to have the assumptions up front? I promise you this will happen every single time. I promise you, as soon as your client knows the answer, right, you're going to present your client the model. Let's take a look again at my PDF. You're going to show the client the cover. You'll say this is our cover page. Then you're going to show the client the answer. And you're going to say, well, under the base case, we think revenues will be this, EBITDA will be that. Under the best case, under the worst case, exactly. Now the client understands what the forecast is. I promise you, as soon as you show your client the answer, the next thing that they always want to know, as soon as you show them the answer, the next thing they want to know is, I can hear you. I can even hear you all the way from Ghana saying this. They want to know, how did you get there? How did you get there? What assumptions did you make? That's what they want to know next. The next thing they want to know is, how did you get there? What assumptions did you make? And that's why we put the assumptions up front. And I will tell you that it's very easy to make the assumption page if you built a strong plan. If you did a good job, do you see where I'm going back up here? If you did a good job planning out your model and making a list of all the data you need, then it's very easy to build the assumption page, because you collect all the data and you enter it in. You make it nice, design it however you want to design it, but make it clear, make it clean, and make it easy to understand. I will also tell you this. We like to make the assumptions blue. You notice that. This is a very common, I hope most of you have seen this. This is a very common convention in financial modeling around the world. We typically make our input cells blue and we make formulas black, okay? So typically in financial models, data input cells are blue, formulas are black. Why? That's so that it's obvious. So if I email you my model, right? If I email this to you, you know immediately which cells you can change and play with and which ones are going to change all by themselves. So when I go down to my financial statements, you can see here, do you see my income statement? All the forecast data is black. Those are formulas. Now, the historical data is blue. That's okay. My historical data is dead. That's actual. So those are blue. Those are inputs as well. Those can be entered here. But any formulas, of course, must be black. And that tells the reader which ones they can change and which ones are going to calculate on their own. So this is what we're going to do. Now, I'm going to show you a really powerful Excel tip right now. Because every once in a while, guys, every once in a while, I do a course, I teach a course, or I lead a webinar, and somebody will say, okay, I understand. They'll say to me, yeah, Ian, I get it. I understand why you like to keep your assumptions up front. They'll say, I get it. It's very easy to see them, to talk about them, and to change all of your assumptions. They'll tell me that. But every once in a while, I meet somebody that doesn't like doing this. They like to put their assumptions everywhere. They like to stick the assumptions and scatter them all over the place. And the reason that they like to do that is because this is what they'll say to me. They'll say, Ian, the problem is if I make a change to my assumption here, I don't know what that does to the answer. So let's take a look. Right now in my model, my EBITDA is going to be 73 and then 47. You see this? This is my EBITDA forecast. And here's my net income forecast at the bottom. People will say to me, if they change an assumption, let's go change our raw material cost. Right now, the raw material cost is 226. What if I make it 256? There, look what I did. I made the cost 256. But do you know what happened to EBITDA? No. What I have to do now is I have to go back. So now I have to go back, and I have to look and say, okay, what happened to EBITDA? It went down, and my net income went down. But I don't know, I don't remember how much. I think it went down by 10. So I'm always going to be going back and forth. People are worried that they always have to go back and forth. If they change an assumption here, then they have to go back to see what that did to the answer. I'm going to show you a really powerful tool to get the best of both worlds. You can have your assumptions up front, but also see the answer. And so I will tell you that the watch window is a feature I want to show you, is a great way to keep assumptions up front, but see the answer right away. And where you're going to go, you're going to go to formulas, watch window. Take a look at what's going to happen, please, guys. I'm going to show you here my screen. Watch this. I'm going to go back to the model and I'm going to go formulas. Look at this, watch window. You might have never heard of this feature before. So many people tell me they've never seen it. It lives on my menu, but it did not always live on the menu. That's new. It used to be hidden, but Microsoft recently put it right on the toolbar. So now you can see it here. Look what happens, guys, when I go watch window, okay? It says I've got a watch window, but it's empty. I'm going to add a watch. And I'm going to say add, and I'm going to go to my model sheet, and I'm going to ask it to watch these 3 cells, my 3 years of EBIT. Let me add another watch. I'm also going to watch 3 different net income right here, and I can click add. So you can do as many as you want. You can make this box as big as you want. But now, of course, look at how the beauty of this. I have my inputs, but I also have a watch window that's looking at all sorts of different output calculations deep in the model. I could add my DCF values in here, whatever I want. Take a look here. When I change this to 256, look, when I change this to 256, watch carefully, please, when I press enter to the black numbers. they all changed. So now, of course, we can see if you change a number here, what does that do to your answers? So it's a really powerful tool. And I have found so many model builders enjoy this feature because it allows you to design it nicely, but still see your answers. If you have any questions, I'll take it at the end on this one. It's a great tool. Please play with this and try it because I think you will like it when you get it going. So where are we at here? I have now talked about tips 3 and 4. I've said keep the assumptions up front and make them blue. So we talked about that. We want to never hard code. The next one here, number 5, is going to take me about 10 minutes, 10, 12 minutes. The last 5 tips are very quick. So I will be able to do the last 5 tips in approximately 10 minutes at the very end. So I'm going to spend about 10, 12 minutes showing you this next page, the scenario page, how to build it, and then we'll move on to the last 5. Looks like we'll be right on time, okay? We were talking about model flow, and I said build a cover, and then an executive summary, and then inputs. But the next thing we should always want to build in a model is, take a look here, the next thing I would strongly encourage you to include in any model you ever build is a scenarios page, okay? The scenarios page. And you can see here, it's so important that I gave it its own tab. Do you see there's a tab here called scenarios? It says economic and pricing scenarios. So what's going on here, guys? Take a look. I have something called cost inflation with a base case, a best case, and a worst case. I have my sales prices with a base, best, and a worst case. And I have my sales volumes, okay? We can pretend this is a gold mining company. I have my growth in sales volumes. I've got sales prices. I've got inflation. I mean, this is just a generic manufacturing business, but it doesn't matter. So what's going on here? What is this page? Well, all this page here, very simply, guys, is more assumptions. This is just another page of assumptions. But what are we doing with these assumptions? I'm going to say with these assumptions, we have 3 cases, right? I built a base case, a best case, and a worst case. With these variables, we have 3. So these are assumptions with a base case, best, and a worst. So my question is why? Why did we build 3 cases, a base, best, and worst, for these assumption variables? Why? It's because these are the key drivers. These assumptions are the key drivers. We talked about them up front. These ones, I don't know exactly what the price of gold is going to be for the next 5 years. I don't know exactly what's going to happen to cost inflation. So any variables that you don't know exactly what they're going to be, we want to build with multiple cases. And I have a base, a best, a worst. You can add more cases. You can have a super worst case. You can have a management case, whatever you want. But these are the key drivers, the most important variables, and I strongly encourage you to build a scenario page into every model. I will tell you that every model should include a scenarios page, every single model, because somebody will always say to you, right? If you build a model and you do not have a base, best, and a worst for the price of gold, your boss will say, can you run an upside case or a downside case? So it's very important to proactively to build this in. So now what I want to show you is how to build it. This is such an important page. I actually want to show you 2 Excel skills very quickly. And then guys, when you receive this model later today, please review this page because I want to make sure you can build this. This is a really important takeaway. I want to make sure you can build this in any spreadsheet. It's very simple. There are 3 steps to building a scenario page. And I will tell you that step 1 is to build this large rectangle. Do you guys see this? Step 1 is to build this big box, this blue box here. Step 1 is to build this large rectangle. And these are just inputs. They're the inputs and therefore they are blue. I want a base, best, and worst for cost inflation. So I'm going to talk to my boss. I'm going to talk to my client. I'm going to say, what do you guys think we should use for the base case, the best, and the worst case? And they will help me come up with my answers. Same thing for the price of gold. What should we use for the base case, the best case, the worst case? I'll do research. I'll look to different economists to come up with my views. So step one is to build this large rectangle. You'll see every variable has a large rectangle with your inputs. But we also then need to build the rest. Well, what else is going on here? I've got a drop-down switch. I'm going to move this out of the way for now. I'm going to just shift this away. What I have here is a switch. This is a switch that controls the scenarios, and right now it has the number 1. But I will be able to change that switch in a moment. It always starts with the number 1. The last thing to take a look at in the scenario page is this skinny row. And what this skinny row is the live case. You'll notice that this is black, that these are not blue numbers, these are black numbers. And so this is what we call the live case. This is the one running in the model. This is a formula. So this is the one, I'll put a note here. This is, I'll put a note that says the live case. This is the case running in the model. So at present, the model is running these numbers because I have my switch set to base case. So what's going on here? All I need to do is build a formula here that looks at the switch. And when the switch has a 1, it will lift up and pull up the base. And when there's a 2 here, look what happens. If you put a 2 in the switch, now it pulls up the best case. The best case gets lifted up into the skinny row. And now that's the one running the model. And if I put a 3 in here, it uses the worst case. So what's going on? How did I do that? Well, I will tell you guys, the way most people build this formula is with an if statement. People will use an if statement here. It's not ideal, it's not optimal, but people use if. Guys, just raise your hands or your thumbs, please. How many of you have used if statements in Excel before? I'm gonna guess most of you have. Just raise your hands or your thumb if you have used Excel's if statement in the past, right? I imagine many or most of you have seen it, right? If you have not, right, I can see a bunch of your thumbs going up. Excellent, thank you. You've used an if statement. The if statement's okay, but it's not ideal. If you look at the slides that I've shared with you, if you look at the slides, you will see here, when you get them, guys, there's a bunch of sections on modeling skills, okay, in the slides. And one of the pages is on if statements. The problem with if statements is they can get very long. They end up looking like this. Do you guys see this? If statements often look like this. There's one if, and then another if inside, and then another if. Has anybody ever seen an if inside an if, inside an if, inside an if, right? You've probably seen that before. I'm looking over at you right now. That's called a nested if statement, right? Mark, I can see that. Yeah, it's called a nested if statement. It's not optimal. It's not ideal because they get very long and hard to change. So we're going to try to avoid having a nested if. And I want to show you one of my favorite skills in Excel that we'll use instead. And it's right here. It's on page 23, which you'll see after. It's Excel's choose function. I'm going to show it to you very, very quickly. But please look at this on your own and look at the slides once the presentation is over. Look at my formula. I have chosen to use a tiny, simple choose function. Look what it does, guys. The choose function says, where's your switch? Look, it says, where's the switch? So it says D6 is my switch, and literally then all it does is it says, where are the choices? Where are your choices? And I clicked on G14, G15, and G16. Where's the switch and where are your choices? Really, really simple. And here's how it works. When the switch has a 1, it pulls out the next item in the list. When the switch has a 2, it pulls out the second item in the list. And when the switch has a 3 in it, it pulls out the third item in the list. It's very simple. The order follows the order that you built it into the formula. So really powerful. So again, if I put a 2 in here, now my choose function is pulling out the second one because that's the second one in the list. Very elegant, very simple. You know why I like it so much? Because clients love it. Because it's so simple. Because people say, I understand. I actually understand. So take a look at that when we're done. But then the last thing is this, guys, you'll notice when I first went to this page, you didn't see this number 1. It was actually hidden. It was hidden behind here. I don't want anybody to see this number. Because it doesn't mean anything. If you show your boss or your client a number 1, they're going to say, what exactly does that number 1 mean? Why do you have a number 1 in the cell? It doesn't mean anything. So what we like to do instead is control the switch by using this little drop down, this very user-friendly drop down box. And there are pages you can see when you come to the slides. Page number 26 in the slides talks about how to run scenarios by putting in a drop down. So read this page for the instructions on how to put it in. What I will tell you though, very importantly, is if you want to build a little drop down box like this, you need to have the developer tab on your Excel. Can you guys see where my mouse is? You must have the developer tab. And I'm going to guess many of you do not. You probably do not have the developer tab, but there's good news. You can turn it on. I don't know why, but by default, Microsoft turns it off. Let me show you how to turn it on, and then it will always be on. You go here, watch carefully. You go to the File menu, File, and then you go to the bottom and you go More, and you go Options. I'm going to go File, Options, and I'm going to customize my ribbon. That's the top. I'm going to customize it, and you can see here where I am. It says Developer. On your computer, this might be off. If it's off, please just turn it on. When you turn that on, you will then have the developer at the very top, and then you can build your own drop downs. It's really simple. From the developer tab, you're going to go Insert, and I want the form controls. If you watch this video again, please make sure you're going to the form controls. And for the form controls, I'm going to click on this one that says the combo box. This one here, it says combo box. And look what happened to my cursor. I got a little plus, and I'm going to draw. I'm going to draw myself a big drop down box. I can change the shape on it later, but it's a very simple drop down box here. Now all I'm going to do is right click on it and format the control. And it wants to know two things. It wants to know where's the input range, and the input range is the range of words. It's those words here. That's my input range. The cell link means where's the switch. So the input range is the text, the words, and the cell link means where is the switch. It's very simple. Once you do that, I'll delete this one. You have a drop down. Then the words appear, base, best, and worst. If you click on base, it puts a number 1 into this cell. If you click on best, it puts a number 2 in this cell. And if you click on worst, it puts a 3. So your choose function is looking at the number, but you don't have to manually type in the number because your drop down does it for you. And then when you move it over, you got this beautiful little drop down, and your client thinks, wow, this is really powerful and very user friendly. So I wanted you to see that. It's such an important feature. Please look at this page, study it, and make sure you can build a page like this in your own models. People will be very impressed if you can even include a page like this in your models. So we're almost there. We've got about 10, 15 minutes. I've talked about model flow, and I told you that this next step was to build the scenarios. Well, the last part of a good model is, from a design standpoint, is to build the calculation schedules and the financial statements. That's the next part of the flow. We're going to build up the calculation schedules and the financial statements. Let's take a look at our best practices. I want to talk about number 6 here for a moment, and then I'm going to do 7, 8 together, and then 9, 10. These last ones are going to be very quick. This is a very important next tip, number 6. Tip number 6 says, in a model, build your financial statements vertically. You don't have to do this, but I find that it minimizes errors. Let's go look at the model. I'm going to go to the model tab. Do you guys see this? In the model tab, let's go to the very top here. The model tab, once again, has my revenue forecast. This is all the revenue calculations. Watch as I roll down. Next, I have a page on all the operating costs. All the company's manufacturing costs are listed nicely. After that, I have the income statement. And as I roll down, this is my income statement. Next is the cash flow statement, right? You can see this. All companies need a cash flow statement. And finally, the balance sheet. My point, though, is you'll notice that I built them vertically. Most of the pieces in the forecast have been structured and designed vertically. That's not always what people do. Guys, can you raise your hands or your thumb if you've seen this? Has anybody ever seen a model where all the financial statements were on different tabs, different sheets? Have you ever seen a model where there was an income statement tab? Look where my mouse is. And then a balance sheet tab, and then a cash flow tab, right? I'm seeing some thumbs go up. Has anyone ever seen when you have a model and every piece is on its own separate tab? So I'm going to be very clear. That's not wrong. It's not wrong to do that, but it's not optimal. It's not optimal. I'm going to put a note here that says, I will put a note that says it's optimal to structure the financial statements vertically. This is called a vertical model, right? It's pretty simple. When you build everything vertically, that's called a vertical model. And in fact, I will show you that this version of the Henderson manufacturing model is our sample model with a vertical orientation. Some people put everything on its own separate tab and they end up with 20 or 30 different sheets. That's called a horizontal orientation. We actually have a version of this model built horizontally on our website. My own personal view is that it's more effective to build vertically because it minimizes errors. We find so many errors in models when people have lots of tabs. And what's the nice thing? Well, the nice reason why I can build vertically, guys, is because you know this. The financial statements talk to each other, right? For every company in the world, financial statements, they talk to each other. You know this. Look, an income statement starts with revenue. It goes down to EBITDA, and it ends at net income. Every income statement in the world finishes with net income. Well, watch this. Every cash flow statement in the world begins with net income. Look how easy it is to build this and make sure it's correct when you stay vertical. It's like a waterfall. It just rolls down the page. Everything is linked and stays really simple. A cash flow statement deals with all the different cash inflows and outflows. A cash flow statement, guys, always ends with the ending cash in the company's bank account. Well, no surprise, look at my balance sheet. On a balance sheet always starts with the cash in the bank account. And so the cash can come right off the bottom of the cash flow statement. Again, my point is everything flows, everything is simple, and it minimizes errors. So I would encourage you to think about modeling vertically, even if you've always done it horizontally. People, I find when they start doing this, find it really helpful because it's much simpler to keep track of what's going on. Okay, so that's very simply here. Point number 6, I'm going to encourage you to, at a minimum, build your financial statements vertically to minimize errors. Now let's take a look at points 7 and 8. Okay, we're right on time. We're going to go through 7, 8 together, and then 9, 10, and then we've got some time for questions. Another really, really major idea in today's session on modeling best practices is do not do any work on your financial statements. Well, what does that really mean? What I really mean by that is do not build any big formulas directly on the financial statements. I never want to see a big, huge formula on your income statement or on your cash flow statement or on the balance sheet. All your calculations should instead happen on schedules, supporting schedules. Let's take a look at what I mean. So if I go back to the model for a second at my income statement, take a look. On my income statement, do you see this? If I click on revenue, this is the revenue. Look, there's no big formula. It's just a link. So where is it linking to? Where is it coming from? As I roll up, it's coming to cell K26. By the way, look, guys, this is a really nice link because it's in the same worksheet and also the same column. It's in column K. So let's go find it. Well, no surprise, it's linking to revenue, which is at the very bottom of a revenue schedule. We build a schedule and then we link it in. You build up your revenue calculations, you get the total revenue, and once you do that, you simply link it into the financial statements. Same thing with my cost of goods sold. I don't want to see a big formula here. I link it to a cost schedule. So I have a cost schedule that does all my operating costs. I get to the total costs. and then simply link it in. Guys, it's so important that we actually have 2 model sayings. These are 2 of my favorite sayings in the world of model, right? Or my phrases. I use these in every single course I ever teach in financial modeling, and I hope you start to use them as well. One of my favorite sayings in financial modeling says something like this. It says, build it. Oops, let me spell it correctly for you. Build it, then link it. Build it and then link it. What does that mean? That means first build a schedule, then only then link it into the financial statements. Build yourself a schedule and then link it into the financial statements. Build it and link it. Build it and link it. So look, my revenue, I have a revenue schedule and it links in. I have a cost schedule and we saw here it links in. What about this? If I need to do depreciation on an income statement, there's no formula here. It's just a link from below. And that's coming from a depreciation schedule. In a full day, if I was teaching you a full day course, I would show you how to build up each schedule. You'll see them though on your own. So here's the depreciation schedule. You build the schedule and then you link it into your financial statements. Same thing with the interest expense, just a link. Income tax, just a link. Look, obviously my totals, my income lines can be little subtractions. Net income is a subtraction. EBIT is a subtraction. That's fine, but no big formulas. Build it, link it. Build it and link it. So we said here, do not do any work on the financial statements. Build schedules, build a powerful schedule, and then link the answer. You will find it so effective to build models if you adhere to these 2 rules. And then finally, my last 2 rules, we'll get into some questions, is this. So how do you build the schedules? How do you make sure your schedules are built really powerfully? We have to keep them simple. You must build very simple formulas so people can understand them and so that they're accurate, so that they do not have any errors. So how do you build simple schedules? We repeat. We repeat our data. We repeat things so much. And this leads me to my second major saying in the world of modeling, which is repeat and link. Repeat and link. It's similar. What this phrase means, repeat and link means when building schedules, first repeat every single assumption and then use the value in a calculation. Repeat every single assumption. Let me show you what I'm talking about. You guys saw that I have an assumption page here. Remember, we have an assumption page. These are all my assumptions. And I also have scenarios. Remember, the scenarios are just more assumptions. These are assumptions, sales price assumptions, volume assumptions. Now watch this. When I want to build my revenue calculations at the very top, my revenue calculation is going to be figuring out the sales price. What do we think sales prices will be for this product? Let's say it's gold. What will my sales volumes be? And then I can calculate revenue. Obviously, revenue, look at my formula. Obviously, revenue is really simple. It's just price times volume. Even if you had many, many products, you just go price times volume plus price times volume. It's very simple. But watch this. When I want to build up my sales price, what I first did is I repeated the assumption variable from the scenarios page. I have repeated my gross sales price. And I've repeated the cost inflation. What that does is when I have to calculate my freight and warehousing cost, look how simple my formula is. My formula just says take last year's number and multiply it by a growth rate, but it's right here. It's very simple. Will your boss understand this formula? Yes, of course. It's very simple. What about the next one? My net selling price is the gross minus freight. Gross minus freight. So simple. I repeated, and I built a tiny, tiny calculation. What about for sales volume? Again, repeat an assumption, and we build tiny, tiny formulas. So I have my sales price, I have volume, and then I can build tiny formulas. So when your client looks at the model or your boss, this is what they'll see. They'll see, okay, what did he do? Or what did she do? A link, okay? Another link. A tiny formula, okay? I understand. A tiny formula, I understand. All the way down, your boss will understand this page is telling a story because it's very clear. And that's what we're trying to do. So the tip I shared you was build very simple formulas. And the way to do that is to repeat your data. The last thing I want to show you then before we stop, we're right on time, is this. Has anybody ever seen, guys, be honest with me, has anybody ever seen a formula in a spreadsheet that looks, look what I'm going to do, and then let me know if you've seen this. I'm going to make up something that makes no sense. I'm going to make up some garbage, but just watch. Imagine I built a formula and I clicked on this cell and I took a number here, and now I'm going to divide by a number on here, and then I'm going to multiply by a number here, and then I'm going to add in something right here. Who cares? Whatever. This makes no sense. But has anybody ever seen a formula that looks something like this? Raise your hands or thumbs if you've ever seen a formula in a spreadsheet that looks like this. I've got a cell on one sheet, a bunch of hands. You can raise your hands or thumbs. Well, who else? It's linking to something else. It's linking to another sheet. It's linking to another cell on a different sheet. Guys, this is a disaster. We never want to do this. Now, it's correct. Let me be clear. Let's pretend this is the right answer. Let's pretend I built it correctly. Let's pretend I got the right answer here. My point is, it's very difficult for anybody to understand this. And when you build formulas like this, it makes it impossible for people to understand and have confidence. So what do we do instead? We repeat every single variable. And what I'm going to do is I'm going to label it. So what I will do is I will first repeat the first one and label it. Right? I will label it here. And then I will repeat the second one. I'll take it out here. So I do this all the time. I will then take the second one and I'll put that in its own cell. And then we'll take the third one and I will add rows and I will repeat every single one. You see what I'm doing? So whatever these things were, label, 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 and then the final one will be the calculation, just like this, very simple. I think this was a percentage, right? So whatever. Now, instead of a crazy formula that looks like this and is going to make people very stressed out, what I'm going to do is I'm going to say equals this guy, divide by this guy, multiply by this one, and then add that one. And now I'll get the exact same answer. Can you see what I did? It's hugely important because now, of course, when your boss enters this cell, they can say, okay, good. What did they do here? Okay, they did this one, divide by that plus that, and they can validate what we did. So important. Build simple formulas. Repeat your data. Make it clean. Make it transparent. So guys, that kind of gets me to the end. We're right on time. I want to leave some time for questions. But in summary, quick summary here, and I'm going to send out these notes. You are all interested in modeling because you're here. It's great. As you know, we're passionate about modeling. You either build models and you want to get better, or you want to build models. It's such an important tool. If you want to work in finance, it's so critical because we need them to answer so many decisions. But your model has to be beautiful. No one ever probably said that to you before. It's got to be a communication tool. It's got to tell a story. And I promise you, if you follow all these ideas, you will be able to build some of the best models in the world and help people make great decisions. So we're going to take some questions now. If you have any questions on the FMI or the exam, you feel free to email us anytime. As I said, the exams are going to continue to be virtual from home. By the way, if you're interested in knowing what level 1, remember I told you, and by the way, I'll show you here very quickly because I'm just going to open up you can see here hopefully you can see my internet screen, but this is the website for the Financial Modeling Institute. If anyone's interested in sitting the exam for level 1, where my cursor is, the AFM exam, literally that exam, it asks people to build a model just like this one. So in under 4 hours, you have 4 hours to build up a model like this from scratch, from blank. And if you can do that, you get designated with the AFM, Advanced Financial Modeler designation. That's the level 1. Okay. So, guys, it's been great chatting with you. Thank you for being interactive. Julie, we got some time for questions, about 10 minutes here. And if there's lots of questions, I'm happy to stick around for a few more minutes. But do you want to give me some of the questions that, and we can talk about them?
Absolutely, Ian. So our first question is from Joyce. Can you hear me okay?
I can hear you perfectly.
Awesome. So the first question from Joyce is, what do you do if you are missing a key input? Are there any alternatives to projecting the same figures, say using Kagger, historical growth rates, or others?
Okay, great question. Joyce, thank you for asking that. So the question is, what if you're missing a key piece of information? So let's kind of unravel that. First of all, I keep asking questions until I get what I want. I will keep talking to people until we can find what we need. Now, remember, Joyce, most people who build financial models, or a lot of people who build models, have access to the company. So if you are working, I'm not sure where you're working, if you work in credit, or you work for the company, or if you are working as a banker or an investment banker, you might have access to all the information. And as long as you can talk to the right people, someone should be able to help give you guidance. There are some people who build models and all they have access to is public information. So if you're working as an investor or as an equity research analyst, you might only have access to public information. You might not have detail on things like the detailed operating costs, for example. So if you don't have access to management, then yes, you're absolutely right. Then you have to make some assumptions. But even then, I find some people are lazy, and there's good data out there. You have to find it. If you truly believe you can't find it, sure, then you can use some way. You can look at comparable businesses, and maybe another company. If you know that another company has, let's say you have 2 gold companies and you don't know what the operating costs are for your gold company, but you know what the cost structure is for a different company that's very similar, you might be able to use that as a proxy. You might just be able to use a growth rate. I would be careful on using growth rates because some businesses are very volatile, and what has happened might not be a good indication of the future. I want somebody to give me some guidance on what the future looks like a little bit. But like I say, if you ask questions and you just can't get what you need and you're being determined, yes, then we have to resort to trying to make assumptions on our own to the best of our ability. Then you're going to show your client or your boss the model, and you'll just keep iterating until you get where you want to go. So if you have a specific example, please share it with me. You can email me. But yeah, I would exhaust every option that I can to try and get some good insight.
Awesome. The next question came to me privately.
Okay.
Is, can the choose function be used in cases where the choices are more than one cell? Example, and they provided a range of if there's multiple cells.
Well, sorry. So the choose function here is looking at multiple cells. Can you see my screen, Julian?
Yes.
So the choose function says, look at the switch and then look for 3, maybe I'm not sure I'm understanding the question correctly. It's looking at 3 different options. You can have more than 3. You can have 4 or 5. I would not use the choose function if you had more than 5 options. I mean, you can, but it would start to get long. Do you have a sense for what they were getting at exactly by linking to more than one cell?
I think that is exactly it, Ian. I think you answered it there.
What you can't do, guys, what you cannot do with the choose function is you cannot give it a range. You cannot do this. You can't say, look at the switch and then look at this range. That does not work. You must click on each cell individually, but it's a really nice little feature. And so it must look at one switch cell. It has to look at one switch cell and then a number of resulting cells depending on what's in this numeric. So it's very simple. Play with it, try it. I think you'll find it makes a lot of sense once you use it. If my answer didn't get what you're looking for, please email me and I'll provide more context.
Awesome. They said that answered it. The next question is, what do red colored cells mean?
Great question. Great question. I've told you that in the world of modeling, guys, we kind of have a religion. There's sort of religion for colors. I think you'll find that most model builders will use one color for an input cell and a different color for formulas. And most model builders will use blue for inputs and they'll use black for formulas. That's pretty common. Wherever I go around the world, this tends to become, and why, by the way, why is black and blue used? Because for most people, it's very easy to see the difference on your screen between black and blue. So it's very easy to see the difference. But when you print the model, anything blue will be very dark when you print it on paper. If you ever make a cell something like this, if you were ever to make a cell, let's say orange or red, it's not going to print very nicely. So blue and black are used. If all you do is use two colors, please use black and blue. But you noticed a third color. Someone had a very sharp eye. There's a third color that I use. This is not universal. A lot of people do this. A lot of people like this, but not everybody. My point is, if you want to use a third color that you like, go ahead. For me, I like to use a third color, and I use a dark color. It's like a dark red or a dark purple. For me, this follows the tip I just showed you. Anytime I'm repeating an assumption variable, I make it a third color. So this is a repeat of an assumption variable, a repeat of an assumption. Every time I repeat my assumptions, I make them a third color. Why? Here, more assumptions. I'm repeating them. Because when I come down the page, I can visually see this is a formula, it's linking, but I can say, yes, that was an assumption, but I didn't make it here. That was an assumption that I made up front, and I'm just using it and linking. So for me, it's helpful to know where are my assumptions that I have then repeated and used. As an example, take a look on my depreciation. I'm repeating the years because the years were assumptions and they came from up front. So I repeat them, and those are the ones when I repeat them. So I hope that makes sense. If you like that, please go ahead and use it. And if you don't, you don't need to.
Awesome. So the next question is from Anastasio. Should the schedules be on the same sheet as the financial statements, i.e. vertical versus horizontal?
So that's a great question. And I will tell you, again, I will tell you my personal view versus what's acceptable. I mentioned that you can build horizontally or vertically, and both are acceptable. And in fact, at the FMI, when people submit, one of the things I like and I love about what we've done at the FMI is not a bunch of strict rules. There are some modeling standards around the world, and they tell you exactly how to build your model and exactly how to set everything up and what to put where. We don't believe that's appropriate because everyone has their own style and everyone has their own views. So there's nothing wrong with horizontal. There's nothing wrong with vertical. My point, though, from earlier, which you heard, is personally, I have found people make more mistakes in their models when they have lots and lots of tabs. Because you're cross-linking. You end up building formulas like the terrible, remember the terrible formula I showed you a minute ago where I was linking to lots of different sheets? When you have all your schedules on different sheets, you end up having links to different sheets and it's much harder to check and get them correct. So we find more errors that way. When we build models, I like to keep the schedules and the financial statements vertical on the same sheet. It's so easy to build, but you don't have to do it that way. At a minimum, I would encourage you to keep the financial statements on one sheet, okay? I would at least encourage you to keep all your financials, income statement, cash flow, balance sheet on one sheet. If you want your schedules on a different sheet, maybe have one more tab called schedules and put 4 or 5 schedules there. That would minimize. But again, if you write the FMI exam one day and you have if you have 10 tabs, that's fine. As long as we know you did it correctly, you will pass. But I would encourage you to think about keeping more together. Just as an example, there's a well-known financial modeling trainer in Nigeria named David Brown. Maybe you've heard of him. He runs a business called D. Brown Consulting. He runs some great training. He's one of the approved training providers for the FMI. And he teaches people to build models where the statements are on one sheet and some of the schedules are on different sheets. And I said a whole bunch of Nigerians wrote the exam recently. They all built it that way and they did a wonderful job. They did excellent. And they have more sheets. Just keep it in mind. Whatever feels right to you, I just want you to think about it. Always think about this. Why don't we do one or two more and then we'll end here. We're just a minute over. But are there a lot more questions, Julian? Or
There's actually only one more, so it's.
Oh, perfect. Great. Amazing.
So from Bless, how do you project complicated one-off items such as foreign exchange and deferred tax in your model?
Not exactly something to cover in 30 seconds. You saved the best one for last, Julian. Just hit me over the head with a 2. Well, so we'll do that one now. I need about 2 hours. So if you guys are okay, no, just kidding. Deferred tax is, we teach deferred tax. If you want to take a look at, we teach deferred tax. It's an issue. I'm trying to think, do we even include deferred taxes? Yeah, we do. Deferred taxes is simply the difference between accounting-based income tax versus government calculations. I would encourage you to take a look at the tax schedule in the model. It's actually very, very simple. And fundamentally, all we're trying to do to get deferred tax is think about what are the major differences between accounting rules, IFRS rules, versus your local government rules. And that often comes down to differences in depreciation expense and things like tax loss carry forwards. If you're interested in a more detailed tax schedule, email me. I will send you one. In our own courses, we also sort of teach some of that. But yeah, it's really just about understanding a couple critical differences between accounting and government. But I apologize, I won't have time to go through that right now. FX is actually pretty simple. For FX, literally all you want to do is set up FX as a scenario, just like this. So in a lot of models, when there's an FX issue, have a variable called exchange rate between whichever two currencies, build a base case, a best case, and a worst case, and then you have the one running. So in many of our models, we would do this. We might see that the gross sales price is in US. I might do this. I might say the gross sales price is in US dollars per unit, right? And that might be US. But then I have another row called gross sales price and this would just be the local currency per unit, whatever that is. And it would be just this, multiplied or divide by the exchange rate. And the exchange rate would be here, right? I'd have whatever, if it was something like this, it would be, you'd have your FX rate and you would repeat this. This would be coming from the scenarios page and you would repeat it and you would convert. Even if you have debt denominated in different currencies, you might need to run through foreign exchange differences on the income statement. It gets a bit complex, but it can be built very simple. Again, maybe it makes sense to have a separate call or discussion. But hopefully that gives you some guidance. So guys, I want to still 100 of you here or so. Really enjoy working with you. I want to thank you all for your time. I'll turn it back to the CFA Society. I was telling them, I used to work in London, England, and I remember very fondly, I worked with a bunch of people from Ghana, and I always have very fond memories. They were some of the friendliest people that I knew and that I worked with, and would love to get to Ghana one day, to Western Africa. So hopefully once this pandemic is over, I'll have a chance to come and maybe do a session with you in person. In the meantime, I hope you found this helpful. Please let us know if you did. I hope you got a few new ideas and tips. All these files will be sent to you. And good luck with your modeling. So thanks for coming today, guys. I'll turn it back over to you guys in the CFA Society to wrap things up.
Thank you, Ian. I believe everyone who attended today learned some new tips. Thank you, everyone, for attending. The recorded version will be uploaded on our YouTube channel by the end of the week. And I'll also send Ian's presentation to everyone that attended the webinar. Thank you all.
Thanks, everyone.